Hi. From Japan, we are once again getting headlines of a local bank that, through its exposure to foreign assets, is suffering through FX and rates. This time, we're talking about Nochu Bank, which is one of the biggest players in the CLO market and has locked in negative carry on their assets. So it's a good thing that we have Pri de Silva with us today. He covers Japanese banks and can tell us all about it and how did we get here. So, Pri, how did Nochu Bank? What's the situation going on there?
Renato, thanks. Thanks for having me. And yes, so as you explained, Nochu Bank has been stuck with a negative carry situation related to its investment securities portfolio, and that has led to a net loss. And that net loss position doesn't look like it's abating. So what the bank intends to do is basically rip the band-aid off and do a restructuring of its securities portfolio. The securities portfolio that we're looking at is approximately $350 billion. And when you think about it, it's larger than the available for sale securities portfolio at JP Morgan. So it's quite a substantial one, although a lot of people may not have heard Norinchukin or Nochu Bank as is known.
Perfect. And by the looks of it, these looks somewhat like Silicon Valley Bank? Are we looking into something like that?
There are similarities, but also very stark differences. For one, the deposit base here is extremely sticky, and some of the deposits that Nochu has are required to be placed there for statutory reasons. And Nochu is basically an aggregator for Japan's cooperative banks that serve the fisheries and agricultural sector. And they also provide a platform, so the deposits are quite sticky, unlikely to run off, and so that's one. The second big difference, unlike SVB, Nochu's unrealized bond losses that were in the news or are in the news are related to securities in its available for sale portfolio, which means they are reflected in the bank's regulatory capital. So any divestment won't have an impact on banks' regulatory capital. And those two, I think, are the two main differences. But the headline story is similar.
Correct. Right. And you did mention the potential for restructuring. How do you envisage that Nochu would be able to achieve that?
Yeah. So when you look at the securities portfolio and how they got here, part of it is their CLO book. They about 20% don't see them restructuring that, and for two reasons. One, it's not easy to divest the biggest CLO portfolio out there. And two, the CLOs are floating rate securities, so they are not where they're seeing the negative carry. The negative carry comes from long dated fixed rate, mostly sovereign, some corporate bonds in there as well. So that's the part that they are likely to divest. So the implications for the broader fixed income market is how much of this stuff is going to be divested and what period of time, and what is that going to do to broader fixed income markets, and is it going to be an outright deleveraging, or will they sell some and buy some other stuff and lock in current higher rates? So yeah, that's how I think the most likely scenario that I envision here.
Perfect. So specific or systemic?
Specific, very unlikely that the other large mega banks are going to see something like this, and it's a unique situation here because they went out and their main source of revenue is the investment book, and because of the main source of revenue, the bank hedged the FX exposure, which in turn brought in a whole lot of interest rate exposure, which they didn't hedge. So that's the underlying.
Risk. Okay, perfect. Pri, thank you very much. We will feel safer after that. Thank you very much, and we'll see you again soon. Please make sure you read Pri's research on the terminal under his bio, Pri de Silva. Thank you, and see you soon.